What if Donald Trump's latest threat against Canada was not about trade negotiations? What if it was not about tariffs or border security? What if it was about using emergency financial powers to freeze access to the international banking system? Because breaking reports suggest that the Trump administration is preparing to invoke emergency authority to restrict or freeze Canadian bank accounts tied to cross-border transactions. This is no longer a trade dispute. This is financial warfare, and Mark Carney's response may have just changed everything. According to sources familiar with the matter, the White House is exploring the use of the International Emergency Economic Powers Act to target Canadian financial institutions. The move would authorize the U.S. Treasury to block or freeze transactions involving Canadian government entities or strategic sectors. The stated justification revolves around trade imbalances and what the administration describes as economic security concerns. But the implications extend far beyond rhetoric. This would represent the weaponization of the U.S. dollar system against America's largest trading partner. The International Emergency Economic Powers Act, known as IEPA, grants the president broad authority to regulate financial transactions during a declared national emergency. It has been used against adversaries like Iran and North Korea. It has been deployed to sanction Russian oligarchs and Venezuelan officials. But it has never been used against a NATO ally. It has never been directed at a country with which the United States shares the world's longest undefended border. Until now. If implemented, this measure would allow the U.S. Treasury to designate certain Canadian accounts, transactions, or financial pathways as restricted. It could freeze assets. It could delay payments. It could disrupt cross-border supply chains that rely on seamless financial settlement. The economic impact would be immediate. The political message would be unmistakable. This would not be negotiation. This would be coercion through financial infrastructure. The timing of this development is critical. It comes after months of escalating trade threats, tariff announcements, and diplomatic friction. It follows Trump's public attacks on the Gordie Howe Bridge, his threats to block infrastructure projects, and his repeated claims that Canada is taking advantage of the United States. Each of those episodes was presented as defending American workers. But this move crosses a different line. Freezing bank accounts is not trade policy. It is financial pressure designed to force capitulation. What makes this particularly significant is that it follows a period in which Mark Carney has systematically reduced Canada's economic dependence on Washington. Over recent months, Ottawa has expanded trade agreements with the European Union. It has deepened partnerships in Asia. It has coordinated with allies on supply chain diversification. Carney has built economic resilience specifically to withstand pressure from an unpredictable administration. Now that resilience is being tested in the most direct way possible. Reports indicate that Carney's response was not defensive. It was not reactive. Instead, sources suggest that the Canadian government immediately activated contingency plans developed months ago in anticipation of exactly this scenario. Those plans reportedly include coordination with European central banks, agreements with international financial institutions, and mechanisms to reroute critical transactions outside U.S.-controlled payment systems. In other words, Canada was prepared. Within hours of the report's surfacing, financial markets reacted. The Canadian dollar initially weakened against the U.S. dollar as uncertainty spread, but then something unexpected happened. Major international banks issued statements reaffirming their commitments to Canadian counterparties. European financial institutions signaled willingness to facilitate transactions outside traditional U.S. dollar channels. The market narrative shifted from panic to resilience. That shift was not accidental. It was the result of months of quiet diplomatic and financial preparation by Ottawa. Mark Carney's strategy appears to have anticipated this exact form of pressure. By diversifying Canada's financial dependencies and building alternative settlement pathways, he created options that did not exist before. Trump's threat to freeze accounts was designed to isolate Canada. Instead, it may have accelerated the very financial decoupling that weakens long-term U.S. influence. This is not a minor tactical adjustment. This is a structural shift in how Canada manages economic sovereignty. The reaction from the business community has been telling. Major multinational corporations with operations in both countries expressed alarm not at Canada's response, but at the precedent being set by Washington. If the United States can freeze the accounts of a treaty ally over trade disagreements, what message does that send to other partners? What does it mean for the reliability of the dollar system? These are not abstract concerns. They are operational questions that affect investment decisions, supply chain planning, and long-term capital allocation. Legal experts have raised serious concerns about the use of IEPA in this context. The statute requires a genuine national emergency. Trade imbalances do not traditionally qualify. Using emergency financial powers as leverage in commercial negotiations could be challenged in court. It could undermine the credibility of future emergency declarations, and it sets a dangerous precedent that other countries could exploit. If the United States normalizes financial coercion against allies, those allies will build systems to route around American control. That process may already be underway. What Trump may not have anticipated is that financial markets dislike unpredictability more than they dislike any specific policy. The threat to freeze Canadian accounts introduces systemic uncertainty. It raises questions about the stability of cross-border finance. It makes investors nervous. And nervous markets do not reward the party, creating instability. Early indicators suggest that U.S.-based financial institutions are privately expressing frustration with the move, not because they oppose pressure on Canada, but because it complicates their own operations. Carney's response, by contrast, has been characterized by discipline and preparation. There were no panic press conferences. There were no emotional denunciations. Instead, Ottawa reportedly activated prearranged agreements with allied financial institutions and continued business as usual. That calm response sends a message. It signals that Canada is not intimidated. It demonstrates that contingency planning works, and it contrasts sharply with the image of a reactive, improvising White House. This episode reveals something important about the nature of power in modern economic statecraft. Trump's move relies on the assumption that U.S. control over the dollar system provides unilateral leverage. That assumption was valid for decades, but it is becoming less reliable. As countries diversify their financial infrastructure and build alternative settlement mechanisms, the effectiveness of dollar-based coercion declines. Canada's ability to quickly mobilize international support demonstrates how quickly that landscape is changing. What makes this moment particularly damaging for Trump is that it could backfire economically. Freezing or restricting Canadian financial transactions would disrupt American businesses just as much as Canadian ones. Automakers, energy companies, agricultural exporters, and manufacturers all rely on seamless cross-border payments. Introducing friction into that system does not punish Canada in isolation. It punishes integrated supply chains, and those supply chains employ American workers. If this policy moves forward and economic disruption follows, Trump will face a familiar problem. He will have created a crisis that he cannot easily resolve. He will have used emergency powers in a way that courts may challenge. He will have alienated allies whose cooperation he needs on other issues. And he will have accelerated the very financial decoupling that reduces American influence. This is not strategic thinking. This is reactive escalation. Mark Carney now holds several advantages. First, he has demonstrated that Canada prepared for this scenario and is not caught off guard. Second, he has international support from financial institutions that value stability over political pressure. Third, he has allowed Trump to take the aggressive action, making Washington appear as the destabilizing force. And fourth, he has options that did not exist before because of months of careful diversification. The narrative surrounding this crisis is already forming. Trump attempted to use financial coercion. Carney responded with discipline and preparation. Markets reacted not by fleeing Canada, but by questioning the reliability of U.S. policy. That narrative is damaging because it undermines the core claim of strength that Trump relies on. Strength is not measured by the size of the threat. It is measured by the outcome. And if the outcome is that Canada becomes more independent and international finance becomes more skeptical of Washington, then the threat failed. Donald Trump believed that freezing Canadian bank accounts would create leverage. Instead, it may have created a crisis of confidence in American economic leadership. He believed that financial pressure would force Canada to capitulate. Instead, it may have accelerated the diversification that weakens U.S. influence. He believed that emergency powers would demonstrate strength. Instead, they may demonstrate desperation. Mark Carney did not escalate. He did not threaten. He prepared. And when the moment came, that preparation became the advantage. This is what disciplined strategy looks like. It does not react emotionally. It builds resilience quietly, and when pressure arrives, it absorbs it without breaking. If you value serious analysis of power, strategy, and consequences, subscribe to Canada Today. We track what matters, because sometimes the biggest threat is the one that backfires.